Good morning, all. CamelbackTrading.org coming to you this Monday morning, August 31st. And we are looking at the last 2 days of the SPY ETF's market profile. And before I start, just a quick couple of things. First off, we had a real nice advancement in subscriptions as we've had 7 people sign up, let alone just yesterday. I put out a video Sunday morning giving you reasons why I think CamelbackTrading.org is a great place for you to learn to trade and to become successful. So if you didn't see that, please check it out. Second, I'm going to be attempting to live stream my market profile throughout the day of the SPY ETF. And I'll also be looking at the triple Qs every once in a while that I have set up now on Window Trader. So a lot of new things, and we're very excited as we continue to grow. Okay, what is going on this morning? Well, if you've been asleep for the last 8 weeks, you could basically wake up and it's the same thing. You haven't missed anything except the market just continues to go up, right? Continues to attempt to go up on gaps, which is emotional trading, mindless trading. At some point, it becomes poor structure. If we gap higher today, it would be the second weekly gap in a row and the third overall. And remember, tomorrow we have a new month where they'll attempt possibly to gap higher out of a monthly again, which we have a monthly gap that hasn't been filled. Both Tesla and Apple split, so we'll see how that reacts. Last day of the trading month, so should be interesting. The volume continues to go down. Our average volume is under 51 million now in the SPY. So let's go over destinations and a game plan for this morning. So right now, Friday's high, which was a weekly high and the all-time high in regular trading hours of 350.72. I will still use that. I'll use it on both sides of the equation. In fact, we've been coming in a bit since earlier this morning. Then we have our pre-market all-time high now of 352.55. So those are your only two upside destinations. For the downside, if we gap higher, it will be Friday's high of 350.72. Then the price probe, L's high, right? We made a new high in the last half hour on Friday. So 350.61. Single prints from Friday, right? Trend day up late in the day. 350.23 get filled at K's high of 349.92. Then G's high, which is the real important one of the price spike of 349.71, right? That's where change took place as we traded sideways inside M's range for most of the day from on Friday until change took place when K took it out and exploded once again for the last 3 time frames. If that gets rejected, then we would have 9 wide at 349.35. Below that, we have the afternoon pullback low and high of 348.75 and 348.15 Friday's low. Okay, game plan for this morning. Well, again, those of you who know me know gap rules apply. Are always put into context. I won't just scream gap rules apply. So if a gap is between, say, 25 cents and $1, I would look to get involved. If it's larger than that, I will wait and see if we get an inventory adjustment. If it's less than that, I'll wait to see if it's filled right away. So we still have an hour and 15 minutes to go prior to the open, so a lot can happen here. But that would be the things I would be looking for between 25 cents and $1. Now, if we do get, say, a 40, 50 cent gap, I'll take a call play. I'd be playing against G's high, so I'd be using 350 calls that expired today if I took a call play. My out would either be the gap fill, or I'd probably give it a little more room to L's high, the price probe. If that gets accepted, now M's range was fairly small on Friday, right? In fact, L's ranges seem to be bigger lately. M's range was only 48 cents. So if you get accepted into M's range, I would expect it to trade the whole thing and then test the single prints from Friday. So I'd be out of a call play if L's high gets accepted below it. Then the important one is not only the single prints but G's high. Does G's high hold? If it does, then I'd still look to take calls at some point, even though at that point value will be at best overlapping to higher. But if we hold it, we should go back up and test Friday's high. If you get accepted below it, POC would be your first destination, then afternoon pullback low, then Friday's low. So that would be an early call play. Put play, if in the next hour we come in and open somewhere inside of here, I'm probably going to be waiting because there were buyers here at L's high and the trend day. But if we had to open below G's high within the next hour, I would look to take a put play and then go to those destinations I told you, which is the POC, afternoon pullback, and the day's low. Now, I've been playing September 14th expirations, the 350 puts and the 355. Just a very, very small position I decided I wanted to start, and I mean small. So depending on how today goes and the week, I'll see if I'll build up those positions. I'll see if I take them off if I don't think they're the right things and go out even further or go to a higher price. But right now, if I take put plays this morning, it depends on if I'm looking to just build a position. If I am, then it would be the September 14th. If not, I'll go to today's expirations to trade the shorter term just for day trading purposes. But again, it'd probably be around the 352 level. If you're in CamelbackTrading.org's trading room, you're getting all this information throughout the trading day. And then just quickly, here's the triple Qs now I'll be looking at. Right, triple Qs right now are not even above Friday's high. Their pre-market high now is 294.80. So both the SPY and the triple Qs all-time highs and the pre-market high, which I would think at some point should be taken out. I'll be looking at this once in a while throughout the day. And then let's go to the charts. So the monthly with 1 day to go, incredibly healthy. One time framing up for 4 months, $10 above February's high. So broke at it at 7-month balance to the upside, very healthy. Weekly, one time framing up 8 weeks, looking to make it 9, possibly on a gap higher. We'll see. I do think at some point, for the health of this market, it should trade sideways to get a breather. It is getting stretched out. That's the only reason I even thought of starting those put plays a couple of weeks out, just to see if we get some two-sided trade before we see if we decide to continue bull or roll over to bear. And then on the daily, same thing, one time framing up 6 days now, looking to make it 7 possibly. Right now we're really trading just about at Friday's high, so I have a feeling some things might be changing here prior to 9:30. Good luck trading. Have a great day, and we'll recap at 4 p.m.